Hi, I'm Jamie West, the broker of West Real Estate Group, and the number one question I get is how's the market? So welcome to my January 2020 edition of the Market Update so I can keep you informed. So I'll dive into the latest news stories for this year, starting 2020. Goldman Sachs states that their new recession model suggests just a 20% probability of a recession. They're saying housing remains a solid foundation for the U.S. economy going into 2020. So housing is actually preventing the recession from taking place at this moment because the housing is so strong. The 19 over 2020 projected sales growth, if you look at NAR, Mortgage Bankers Association, Fannie Mae, and Freddie Mac, they're all projecting more sales this year than over 2019. Part of the reason for the optimism is they expect mortgage rates to remain low over the next 2 years, averaging 3.8% into 20 and 21. So interest rates are projected to be nice and low for the next 2 years, and that will continue to drive the market. And you can see 2019 and then Freddie Mac, Fannie Mae, Mortgage Bankers Association, and NAR, what their projections are throughout 2020. So that leads us to the biggest issue in housing is actually an inventory shortage because of this. Realtor.com says in 2020 we expect inventory to struggle to grow and could instead reach a historic low level. So a little bit of history showing it decreasing over last year, last month, and then today. New construction is coming in and trying to help with this. We now expect single-family housing starts and sales of new homes to increase substantially, aided by the large uptick in new construction as builders work to replenish inventories. So there's been a lot of new construction out there, so that's good for first-time home buyers, millennials looking to get into the market as well. But the Realtor.com senior economist thinks that despite all of this, we will still have an inventory shortage continuing on. As millennials are out trying to take advantage of this, it says, causing the inventory to vanish is further compounded because a lot of sellers usually want to wait till the spring to put their house on the market. So if you think you're waiting until spring, there are a lot of buyers out there looking already in January and February. Continues on to say shoppers modify their strategies for navigating the housing market to become more competitive due to rising prices and low inventory. The search for home is beginning earlier and earlier. With housing inventory across the U.S. expected to reach record lows in 2020, we expect to see this trend continue into the new year. So people have begun their home search earlier since 2015. So in January 2019, it fell just 1% short behind the highest number of views per listing, which was actually February. So in 20% of large markets, January saw the highest number of listing views in 2019. And they gauge that based on the showing times. That's what we use when we go to request a showing for the house. That kind of tracks the showing, sees how many buyers are actually out there looking at homes. So it shows the increases in the different regions here, 12.6% growth in home showings compared to 2018. So they expect 2020 again to be even stronger than that. So Frank Martell, president and CEO of CoreLogic, they expect home prices to rise at 5% over the next 12 months. And then continuing on with our updates, home values are projected to continue to appreciate through 2020. You can see the different predictions of the different companies listed below, with a median of 3.5% was in 2019, which is actually the historic trend for appreciation is 3.5%. So with many people thinking the recession is going to push back now to 2021, you can see that 2020 at 2.8 and then a little bit down to 2.3 during that time of the recession, then kind of slowly coming back up to 2024 of 3.4, which is just under our national average. So we all know that real estate can help build your wealth, so they're thinking $47,500 is going to be the average family wealth over the next 5 years based on increase in home equity. And a rundown of the slides here. In the last 12 months, 44 states had an increase in home equity and only one had a decrease. A lot of people have been taking advantage of the lower interest rates, so they've been selling their houses and moving up to a bigger home, and you can see the differences between the age brackets here and the price of the home sold versus the home that they purchased. So there's a lot of move-up buyers. And going on into the sales, the average days on market, you can see here on the chart over the regions here. So Florida, we were 31 to 45 days on the market. And this just goes back to last January to current here, home sales year over year comparison. The pending home sales here year over year by region. And then going into the home prices, The existing home prices year over year, it's by region, so here we're at about 5%. And then this is the year-over-year price changes for the 20 city composite. So you can see where we're at here, and it gives us a better number here. So this is for the month, year over year. And then we have the chart with the forecasted year over year change in price. So in Florida here, you can see 5.7%. And moving on to the housing inventory levels. So seller traffic here in Florida remains stable. Months inventory, so 2011 through today, so you can see we are one of the lowest regions. We've been a little bit lower in 2018 and then a little bit around this time last year, but we're going back down inventory here. Months inventory of homes for sale, again, I'm showing you kind of the ups and downs over the last 2 years. And here's a month's inventory of homes for sale over the last 12 months. And this is national again, this is not brought down to the local level here in Florida. And then this is just a comparison year over year for the housing supply. And then going into the buyer demand, indicates the foot traffic, year over from 18 to 19. And then the buyer traffic, so we are still stable here in Florida. And going into the interest rates, as the history here going back to 2016 and where we currently are. And we have the projections again with Freddie Mac, Fannie Mae, Mortgage Banker Association, and National Association of Realtors, and then we take the average of all of those. And this kind of just puts it on a chart for you so you can see how it's been trending. And again, on my website, you can go and get the quarterly home buyer and seller guides. They come out every quarter for you for tips on buying or selling a home. And again, thank you for checking out the January 2020 edition of my National Market Update in Real Estate. And if you have questions on the local market or your neighborhood, just reach out to me and let me know how I can help. Thank you.